Welcome to the Real Estate Show on KMED, October the 17th. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. We're both brokers with John L. Scott in Southern Oregon. You know, we get together with you once a week here on KMED to talk about all sorts of things related to real estate. And my goodness, you know, it never ceases to amaze me, the different topics, the different levels of interest that are out there in this whole real estate market. It's huge. The economy's so much driven in our valley because of it, and you know, it's cool. It's good.
How many shows are we at in our count? We're
over about 300, about 305. I
can't think of a single hour that was hard to fill of the
yeah,
bunch.
It really hasn't been.
And especially when you get the right folks in studio with us, we can really get some great information.
Well, today I'm thrilled to have two John L. Scott brokers with us who. Well, they're just some of the best in the business, and Doug Morris and Deanna Sickler, who joined us here today on the Real Estate Show. And, well, first, welcome. You guys need to talk right into those things there. First of all, welcome to the show today. And, you know, I always get a kick out of it because Doug Morris, he's been, well, long before we became brokers, Joe. We're like neophytes, really, compared to these two guys in terms of the lengthwise. But, Doug, when I first met Doug Morris, we were Channel 5, remember? And Doug was a checker, right, at Van Way's in Jacksonville.
In Jacksonville. Yeah. Now it's Ray's Market now.
Now Ray's Market. And here you are 25 years later. You made that switch, and wow, it was a good move, wasn't that?
It was an excellent move.
And you've been at it now.
Quiet pace there.
Yeah. Well, good for you. And Deanna is, well, when I first met Deanna, you were at Windermere, right?
Century 21.
Century 21,
Mm-hmm.
Okay. And now has been at John L. Scott since then, and I know enjoy that there. You have a partner, Diane Lane, is your real estate partner?
Correct.
And, well, the two of you do really well. Nice to have you here. And you've been Deanna Joe is one of the few real estate brokers that we've had on the show over the years whose career has been in real estate. Remember, like Doug, you and I, we all start from some other place to get where we are today. So it's good to have you both here. Well, tell me what your experience right now, just the market overall. It's been an amazing few years. When we started our show in 2009, you know, we had about 80%, not 85% of the sales were foreclosed properties. When we would go over these statistics, that's reversed. Your impressions of the market, what's happening today? Deanna, why don't you start us off?
You know, it's interesting. I would say, especially just 2015, the market to me is back to that healthier level where we're not seeing near the number of distressed sales or, you know, we've lost the short sale inventory. We've lost the foreclosure inventory. We're seeing a lot of movement among the locals, both upgrading, purchasing investments. It's nice to have it bounce back because I've been in it long enough to see it when it was this way, then when it hit the bottom, and then now that it's climbed back up. And so it's a nice change.
And it did hit bottom, as you know.
Yes.
Doug, what about you? You think same thing for you?
Same thing. Yeah, 2005-06 is when the market started going down.
Yeah.
We our values went off about 48%, and now we're climbing back up, and the market is very busy right now. With less than 2% vacancy for rentals, there's a lot of investors that have been buying, and they've been buying with cash, and there's been a shortage of houses. And then our bigger houses have been selling too. A lot of that has been cash buyers.
Well, that's what I'm going to ask you about. So let's talk a little bit about just kind of the luxury market. And I know, and you sell everything. I'm not saying you sell all sorts of properties. The luxury market is just something that, how do you define what the luxury market is, first of all? How would you define that if someone says to you, what is that?
You know, it's interesting. I think rule of thumb, typically people are thinking $750,000 and higher. I think we locally probably consider $600,000 and higher to be more on the luxury end.
Okay.
It really depends too on the community. I mean, in Ashland, $600,000 doesn't go nearly as far as it does in Talent or even in parts of Medford. But that's what I would think people typically peg luxury real estate as, anything that's nearing the $750,000 mark and higher. And I've personally had more sales this year at that price point than I've ever had, and maybe even several years combined.
Really?
It's been very interesting to see a lot of high-end activity when typically days on market could be 2 and 3 years.
Well, I know
we're seeing things a lot.
That was a pent-up market, though, for a long
sure.
time. We did not see a lot of sales in those higher ranges.
Well, and at least in my experience, the people who own those homes just held on to them. And they were going to ride the wave. And now, you know, they're seeing some great returns, and we're getting a lot of activity.
So what happened when the Great Recession hit? Then the market for these properties, then Doug, just fell out?
Well, a lot of people lost their houses,
Yes.
unfortunately, or they kept them. If they could afford to keep them, they would keep them. So luckily, if the people kept them, now the prices are going up, and now they're selling, and then they're either buying more expensive homes, or they're buying different homes that will fit the needs of the buyer.
Of the buyers, of what they're looking for.
Right.
And how big is the luxury market here? I mean, is there, when we look in, I know in our John L. Scott office meetings, and this last week, I think the supply of inventory is low across the market right now. It's 2.3 months supply or 2.4 months supply overall, but the luxury market's got to be a little bit different than that. So, kind of, what is the market actually? What does it make up of?
The last time I looked at the statistics, I think we have close to 12 months supply for homes over $1 million.
Okay.
Which truthfully is not that much.
It's not that. I was going to say it's not that much, really. I mean, it was higher. Okay,
Oh, for sure.
All right. And how many homes are we talking about? Are there a lot? Is there? Do you know? Is it hundreds? Is it a few?
Well, there's 200 homes on the market if you go from 500,000 and above, just in Jackson County.
200 homes. Okay.
200 homes.
Okay. 500,000 and above.
I'm sorry, 750,000 and above. Yeah, there were 200 homes.
200 homes. Okay.
Yeah,
And,
which to me is just does
That's not very
seem-
many.
And you mentioned days on market could be 2 to 3 years at one point. What are days on market looking like now as these properties are heating up and starting to move?
Well, like any price point, I think it's all driven on value. So when a buyer recognizes that it's a fair value, your days on market, I've seen luxury homes go pending in a week if they represent a fair value. I think the big difference now between the way it used to be is for a long time there, you could build a home for a lot less than you could purchase one existing.
Yeah.
Then there was a big, probably 12-month period of time where you could buy an existing home for a whole lot less than you could build it. But you had to have the money, and you had to be able to get financing, and getting a jumbo loan, so anything over $417,000 was nearly impossible. So I feel like we saw it sort of dry up for a period of maybe 18 months to 24 months because there wasn't financing available.
It was the financing part of it
I
that
think
was
it played a
messing
part.
it up. Sure.
Maybe
It
not
played
for
a big part.
Yeah, maybe not for the person acquiring it, but they were taking that into consideration for when they went to sell. Their market to be able to resell it was a lot smaller than it had been. When anybody could get a loan if you could fog a mirror, that wasn't happening anymore.
That was gone.
And the interest rates are so amazing right now. I mean, they're under 4% right now.
Yeah.
They're amazing.
And that is really helping that type of a luxury home property, isn't it?
They can move up with more of a house with less of a payment right now.
So when you two are talking with clients and potential clients of these types of properties, what are the things that you ask them that you need to know that help you find the types of homes that they're looking for? How do you
have
do
to
that?
listen to what your client wants. What are they really looking for? Are they looking West Hills? Are they looking Ashland? Are they looking East Medford? Do they need 4 bedrooms? Can they go with 3 bedrooms, or can they go with 3 bedrooms and an office? Do they want a 3-car garage or a 4-car garage? There's a select hearing you got to listen to for your buyer to really get what they want and try to find it for them. Right now, I'm looking for a West Medford area. In the east, in the West Hills right now, Jacksonville Old Stage Road area, and it's kind of hard to find stuff out there. I just closed on a property that was a cash buyer that came up from Carmel, and it was listed for $1,199,000, and it actually sold for full price.
Full price
cash buyer. And they're going to be using it as a second home, believe it or not, and keep their horses on it. So at the property. So, it just really depends what is out there for your buyer and what their needs are. It's just, Deanna and I bounce things off each other all the time. It's like, okay, what do you got? What's coming up for sale? Because a lot of the stuff we can't find right now.
And truthfully, to touch upon what Doug was saying, many times your buyer thinks they know what they want, but they don't.
They don't.
So it's not just hearing what they're saying, it's interpreting it and then adjusting as you start showing them things and realizing they don't need 6 bedrooms. What they need are 4 bedrooms and 3 offices. So eliminate the criteria of what has to have a closet because they're not using it for that. And but it's slim pickings. And so it's nice to work among other top producing agents, especially at that level, because we're going on listing appointments, 5, 6 of them a week, and we've always got something in the pipeline. So we're able to call and just have that networking ability sort of behind the scenes of, here's what I need, what do you have coming up? And it's been fun. It's been fun to see it.
It's fun to show those properties, I would think.
Yeah,
I love those.
What a great benefit for your clients.
Oh, yeah. It's huge.
That networking gets the deal done for them.
So we're talking with Doug Morris and Deanna Sickler from John L. Scott here in the Real Estate Show today about luxury homes right now on the Real Estate Show. You take, Doug, people pay a lot of, these homes are paid for in cash, luxury homes. Is that fair to say? Is it half of it maybe, or is it less? What do you think?
Just now?
I had a house that was listed on Goldstone out in Central Point, which is the West Hills area, and it was listed for $1,750,000. And it wasn't on the market very long, and I had 3 cash buyers for it. One was local, and 2 were from California.
Okay.
And the California buyer did end up buying it for full price.
For full price.
And that was back almost in June.
Wow.
And it was cash.
All cash.
And it was
Yes.
cash. Dan, you see the same thing? Cash buyers, mostly in this type of area?
I think for certain, everything I've sold over $1 million this year, over $1 million, and I recently closed on one that was closer to 2.5.
Okay.
They were cash.
Cash buyers.
I would say
coming through.
between say 750 and $1 million. See a lot of financing because the rates are less than 4%. So why not borrow and use your money?
Yeah, I was going to say that's almost
It's unbelievable.
counterintuitive to the interest rates now to put your cash out when you could get money so cheaply. But they probably have a better handle on that than
But
mine.
the cash buyers that I've seen in a lot of ways, I believe they offered cash to give themselves leverage when purchasing. It wasn't because they necessarily wanted to put a whole stockpile against it, but we, like Doug was just describing, we had multiple parties interested. We had something listed in Ashland that was at $1.5 million. Started at $2 million, made some adjustments, got it to $1.5 million, had 2 interested parties. The buyer stepped up, wrote cash. The other person couldn't compete. My guess is, had we not had a competing offer, that first person wouldn't have written a cash offer.
Interesting.
But they did it,
that? Yeah,
and they prevailed.
Yeah. When you talk to counsel your clients regarding loans on these types of properties, do you see people finance these by, say, $1 million? I put $200,000 down. Can I finance the rest? Are you seeing that happening? And how is that coming about?
I'm not seeing it happen. I know
You're
it's
not?
possible.
Okay, you're not seeing that, though.
They don't want to do the dance.
They don't want to do it.
Sometimes what they'll do is they'll put on $1 million house, they'll put down quite a bit, like $500,000.
Okay.
And they'll get a loan of,
a smaller amount
like
loan.
five. They'll get a loan of $417, which keeps them under the jumbo. So they get the best interest rate, and then they use the rest for cash for their down payment.
So that's how those are being done. Well, that makes a lot of
Taking
sense
notes.
because, and are you concerned that, so really the interest rate, if it rises a little bit or rises here, in many ways it doesn't affect that part of the market the way it does the lower end of the market, right?
I think it still affects it.
It affects their stocks more than anything.
Yeah.
It affects their income
wealth.
from the other side.
Well,
Their
their wealth is affected, but
Yeah.
I don't think their mortgages necessarily.
Okay. Yeah. And tell me about rural properties that you're seeing in the luxury market, because we talk all the times on the show here the effects of legal marijuana, GMO-free area, the vineyards in the world that are out there, and the way agriculture is being changed here. We've had many shows on this. So tell me about that part of the luxury market in the rural areas. Are you seeing? Is there a big demand for that as well right now?
What's interesting is the 2 properties Doug referenced and the one I referenced, they're all rural.
Okay. Rural
In fact,
properties. Okay.
my last several that have been at the highest price points were all rural properties.
Rural properties. See, Joe, we see where this is. That continues
You gotta
that.
market.
That really continues that trend that we're seeing and the demand for those. So that's what you're seeing. Are they vineyards? What are they buying out of these properties then? Tell me that.
One's a vineyard,
Yeah.
and they put over 60,000 grapes in it, and out in the Applegate, and that was $2.5 million. But on Thursday, I just recorded a property that was right under $1 million. There was multiple offers on this property too, and these people did get a loan, and it was a local buyer.
A local buyer.
And not rural, correct?
Not rural.
And
it was
not a rural place.
No, it was in East Medford in a subdivision.
That's pretty exciting stuff. But are you selling vineyards? Tell me about the demand there. Are we going to? Is that going to be something? I know you're both involved with that.
I haven't had too much demand for it. I think there was a time when it was all the rage,
Yeah.
and then there was a time when growing olives was all the rage.
Yes, we
Yeah.
grow olive oil here. Yeah.
Yeah, there was the sale that I sold most recently that was over the 2 million mark.
Okay.
It was going to be an equestrian property.
So horses, okay, sure, horses are big things. We have some fabulous horse properties in our valley, don't we?
Irrigated land right now, I think, is a premium.
You
It
bet.
is.
Yeah. Well, I remember it wasn't that long ago where I walked into the Talon Irrigation District office, and you could buy some irrigation rights for not that much money. And today you walk in there and
About $5,000 a pop if you can even get it.
I was going to say 10,000 is what I've seen some
Yeah.
of them trying to get. So it's really changed. So water is going to be a big issue. And
Our population is going to double in the next 20 years.
Yeah.
We have a housing shortage, and the Wise Water Project is one we really got to get behind because that's going to really help us meet the need. Our resources could eventually run dry. Continue to grow.
It's an interesting topic. All we're talking here on the Real Estate Show today. Got a break coming up here. We're with Deanna Sickler and Doug Morris here on the Real Estate Show talking about a luxury market in Jackson County. We're going to continue here with them right after this. Real Estate Show rolls on KMED, AM and FM this weekend of October the 17th. Pete and Joe, the real estate guys, with you. And thanks for joining us today, mid-October. Weather changing outside. Lots of things going on. Hope you're going to go out to the home tour this weekend from the Home Builders Association of Jackson County. HBAJC.com is where you can get that information. And Joe says it's a good one. Brad Bennington's pretty excited about it. It's they were doing the fall home show. Remember that? And they cut that one out, which was a smart idea, I think. And this home tour could be really, really cool.
This is a way to just get in and traipse around homes you just would never be in unless you knew the people and were invited there, and to meet the builders and to really learn about some of the innovative new things that are coming out, bringing some incredible value to new homes that's hard to match for homes on the existing market.
Well, today we're with Deanna Sickler and Doug Morris, two John L. Scott real estate brokers with us on the Real Estate Show today. And well, Deanna, you just built a new house, didn't you?
I sure did.
Was that fun? Was that an interesting experience?
Love it. My husband and I have built a couple of homes together, and despite what most people say, we actually enjoy the process. I'm glad it's over and we're settled in, and moving is never fun. I think it was a good experience for me to relive again.
It's probably good when you do that with clients because you can you go through the experience yourself. You know what to expect, huh?
Yeah.
So you got a real fancy home, like
Not so
one
much.
of those $1 million plus homes there, yeah?
In fact, I don't know any of what you're talking about. It's a modest home.
It's a modest home.
Yeah.
Well, good for you for building that because believe me, there was no building going on in, it was horrible. We didn't have anything.
Congratulations to find the subcontractors and the to work on it.
Yeah, we had a great general, and it was an awesome experience.
All right, let me ask you both this question regarding new construction on luxury type properties. How does that work generally? People buy the land first and then build them separately, or do you work with people from the ground up doing that much, or is that market not that way?
There's not much out there for people buying the land and building a luxury house because they feel like they can buy existing right now at a good value if they can find it. They can't find it, of course, we'll try to find the land for them, and then we'll hook them up with a builder if they don't have one.
Well, I know I've gone on on the Tuesday tours of our office tours and the Thursday Ashland tours that we go on as well. You go into some luxury properties, around, and there really are amazing. There truly are some amazing places, and some that are really very, I don't want to say odd or whatever. Eccentric. That's the good word to use. Those are like, I walk into them and I go, who in the heck would buy those?
Yeah,
but is that true?
They can definitely be a tough sale. We have found that folks spending upwards of $1 million, $2 million, $3 million, even $10 million to build a home, build it for themselves. They don't really give consideration to what the next person may want because in their mind, this is their home and they're not selling it. So when those properties do come on the market, if they've kept them neutral enough, it's typically not too difficult to sell, or at least someone could visualize the modification. But when they go crazy, it's a tough one because somebody spending $4 or $5 million on a property doesn't want to inherit somebody else's vision. They want to create their own.
What do you mean by neutral, Doug? What do you mean by that? Neutral. What does that mean?
Neutral would be neutral colors.
Okay.
Travertine tiles, granite, that's neutral. Appliances that are upgraded, but not like purple or pink or green.
Okay. All right. Okay. Yeah.
So,
Robin egg.
just whatever is out there that people that like. that is out there in the market, and it's all neutral stuff.
What are some of the interesting ones that you've taken on and that haven't
my
been so
God.
neutral?
Lots.
That's I think what we really want to hear.
Those are hard sells.
That's the stuff.
I mean, I've seen it all.
Especially the one in Ashland.
Yeah,
that we
I
tried
sell
to sell.
a fair amount in Ashland, and we've seen some things you never thought were imaginable.
But it sold.
It did. There's a buyer for everything if you get it to the right price.
But it might take a couple years.
I didn't believe
Or
that
7.
at first, but there is a buyer. There is a buyer for every property out
Yeah.
there. So that was an odd one. Yeah. You
Oh,
did
yeah.
that?
You're
Yeah, I
really
mean-
holding back on us.
I'm trying to be diplomatic about the whole thing.
Is there ever been properties where you just gave back, say, I give up, I can't sell it? It's not gonna sell in this price range or this kind of thing?
It takes a finesse. I mean, you reach, like Doug and I sell all price points. And so I wouldn't say I specialize in luxury. I mean,
Sure.
I feel like if you looked at across the year, it's pretty even throughout. But I think I have found over the years that the clientele that is building those types of homes, you have to decide pretty quickly, can we work together? Is this a good fit? Because when they are doing some obnoxious things to their home, sometimes that comes with an obnoxious personality. So you have to decide, is this going to work well? Because I've taken listings before where they were so complex that I candidly said, listen, I'm going to market your property. I'm going to bring a buyer and I'm going to represent you and give you awesome exposure. But when the buyer comes for this type of property, we're a team. And you need to explain to them all the reasons why you built what you built and where and at what energy field, because they're going to relate to that and I don't. And if we can come to some sort of common ground and respect each other for that difference, this is going to work awesome. And it's been awesome. You just put it out there from the beginning. But you're right. There are times when you just go, oh, I'm not the right fit.
Yeah, I can imagine that happening
Yes.
more than once in your life as well. Well, it's interesting how over time this changes. What are the requirements you think, Doug? Tell us that would be in a luxury home. What do you think are the things that you pretty much have to have in them?
High ceilings.
High ceilings, okay,
3 or 4 car garage.
okay,
Pool, spa,
Pool,
waterfalls, nice landscaping, nice master bathroom with maybe a fireplace, maybe a steam shower, a kitchen with all the right appliances, double ovens, 6-burner gas cooktop, lots of granite, lots of stone floors, wood floors, and large windows overlooking probably views of either mountains or the city.
I'll
Yeah.
take one. Thank you.
those are out
Sounds
there, aren't
good.
they? Yeah. Well, that's what you do. When you promote, say you have a listing in this category. Well, when we have our listings, Joe, we go into the extravaganzas, John L. Scott and all the kinds of things that the company to promote the things. Do you market luxury properties differently than you do a regular property, say in a lower price range?
Well, as Doug touched upon, a lot of our buyers are coming from out of the area. So I think it's important that we reach not just across the United States, but internationally.
Really? Okay.
Like Seattle's market hit the news recently for having a huge influx of Asian buyers. You've got to reach them.
Lennox
So-
Scott-
Lennox Scott was telling
yeah.
us that, the Chinese market and how that is affecting this. So you're seeing that, you're seeing some of that here.
Oh, yeah.
Filtering come down to our place.
I have a $6.5 million listing off of East Medford area. And this buyer came in from China just to look at one house. And she almost bought it.
It's almost like, well, Doug, you just confirmed what Lennox Scott told us when he was here, that the Chinese market is going to be filtering into here. That's
the
the
West
first
Coast
first
is
time
the
I've heard it coming
landing.
into here. So that's
Landing
interesting.
zone.
So but do you mark? I mean, how do you get those people? Are they coming here? They're wanting to see this place. Is that what they're coming to now?
Well, fortunately, we have the internet. So the internet has just done us huge favors by
Okay.
you can start here and it's seen throughout the world. I find that that's probably drawn in the most as far as the higher end buyers, but the sale that closed at nearly $2.5 million was a local buyer.
Was a local buyer.
Yeah, and they moved here from the East Coast 7 years ago, and I'll be listing their property, which is also luxury, but not to that extent. And so I feel like what we have really focused on, John L. Scott does a great job of reaching,
luxury
international
market,
buyers,
yeah.
the luxury market. Just the website alone, just johnlscott.com is over 1 million hits a month.
Yeah.
So
Which
that's
is
sort
amazing.
of,
Yeah,
it
yeah,
takes care
yeah.
of itself, gets them to us, and then from there we figure, like Doug said, figure out what it is do they really want, and then you find them property. So
And so far, you've been able to do that pretty successfully.
we're doing all right.
And the inventory that's out there right now, Are you impressed with the luxury market that's out there, the homes that are out there, the properties that are out there?
I think there's a decent variety.
Yeah.
I mean, there's more to choose from now than as far as luxury homes. I feel like there's more to choose from than there have been.
Pete, they're luxury homes.
Yes,
That's what I'm saying. Yeah.
They're pretty. Yeah.
they're not so bad.
Yeah,
they're
we'll
not
give
too
them thumbs
shabby.
up.
Well, I mean,
Yeah, we love showing them.
Well, but sometimes, well, are they over? I mean, you can overprice them too, and no one's going to buy them, so they're going to sit. Like we always talk about being market ready day one. Maybe luxury homes a little bit different than that. I don't know.
Well, price cures all ills. I mean, the property that I had described to you that started at $2 million. It was less than a year from the time we started over $2 million, 2.2, to ultimately selling for $1,450,000. But we were diligent about making that adjustment, and that made all the difference.
And if it doesn't sell, it's the price probably.
And
Most the problem, isn't it?
Multiple buyers for these higher end properties. That's really caught my ear. And
in every one of these.
Yeah.
That's the shocking part of that. Multiple buyers for luxury
Cash
homes.
times 3.
They love that for us.
We got
good options.
We got one
Exactly.
more segment to go with Deanna Sickler and Doug Morris from John L. Scott here on the Real Estate Show. Real Estate Show rolls on KMED October the 17th. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. Don't forget, you can contact us anytime. You can find us at realestateshoworegon.com. All of our shows are there in the past. You can watch them there as well. We want to give you a quick reminder. There's free well water testing at the OSU Extension Service the last week of October. You can contact at JSWCD, the Jackson Soil Water Conservation District, for information about that class. You take a cup of your well water and they'll test it up for you, give you the test results at the end of the class. All right? That's a good one.
And check out the homes tour from the Home Builders Association of Jackson County. The Real Estate Guys might be on a prowl on one of those Sundays.
Sunday's coming up here for that as well. Today, we're with Doug Morris and Deanna Sickler, two terrific John L. Scott real estate brokers who, well, I guess they really, it's an honor to have you both here. Boy, you both have created, what I love about these two people is that you've created fabulous real estate businesses. And you've seen that. Obviously, you're successful. You got great clients. So congratulations for that, because that's a lot of work. It's a lot. It's terrific and good for you guys. Anyway, all right. So just tell me as we go here. We talked about with the luxury market here, but it's about the rest of the market in general that you guys are seeing. It's going to continue. Is that what you see happening here for a while? And inventories remain, low, so it's going to remain a seller's market. I'm just curious as to what you two think about the market here for like the rest of the year and into next year.
I'm not sure about Doug, but for us, month of September is typically quiet, and we had a record number of closings.
Is that right?
So when we are usually getting a sort of back to skull regroup, it didn't happen. So I'll be curious to see if January, February typically are our slowest times. Other than September, so I'll be curious to see if that happens.
The just 3-month snapshot from the MLS statistics, 2014 to 2015, were 200 more homes sold for that 3-month period.
Doesn't surprise
this year
me.
compared to last year. I was saying, if you haven't seen your realtors at church or in the gym,
That's me.
they're panting right now because they've been selling a lot of homes.
Yeah.
Well, and usually our market is usually slow during the holidays, like November and December. These last 2 years, we've been super busy during those holiday seasons.
And let me ask you this, because
Note to sellers out there.
Right.
people right now, if you're thinking about selling, to me, this is really a time, because it's simply the inventory is so low.
And
You've
the
got
interest
a greater
rates.
chance. And the interest rates are still low.
Yeah.
And the demand is high. Yeah.
Right.
And you're seeing the boomers, the retirees from California coming up here, or the
All
people from out of the
kinds.
state. Who's coming here? Because it's amazing how much turnover we have in our valley every year in homes.
We
Where
had
are they
2
coming?
homes this week, to touch upon what you just said, that both of our sellers resigned themselves to renting their homes because they hadn't sold. Literally said, okay, we're going to offer it for rent. We'll still sell it. Offer came in, pending. Another offer came in, pending. Both from Southern California.
Southern California. And they retire.
Different price points. One was mid threes, both
yeah?
retiree empty nesters in their 60s. One was in the mid threes, one was at 8.
Yeah.
So it's not just one price point that's more active. I mean, there's hardly any inventory under 300, so that sells multiple offers in a second.
Jeez.
But pretty consistently throughout, and even the high end, we're getting a lot of activity. And we need more homes. There just isn't enough.
Great that the international market has found us now, because we're not growing fast enough.
Correct.
Because we're going to change in the next 20 to 40 years significantly to the Rogue Valley that we've grown and loved and lived in. We're going to have a lot more company.
Well, look at all the new things that have come into Medford. I mean, In-N-Out just opened up.
Yeah.
Costco, the new Costco coming in, and
Trader Joe's.
Trader Joe's, and
Well, we had Josh Gibson, our Jackson County Assessor, was with us on our TV show this week, and he'll be on our show, by the way, on the 31st. He says the valuations that are coming in your property taxes countywide this year are up 7%, up 7%. It didn't hit double digits. Those things concern me, if you get up there, because are we going to go too fast? Are we getting too crazy again? You guys have experienced that, Doug and Deanna. You guys have been through this before.
We don't want it to go too fast.
And that's what I think more than anything else is really the thing you got to watch. Because if it does, we're just going to go over the cliff again.
Through that build up to the mountaintop and that drop to the ocean bottom, we're almost where we would have been over time in the market values and things like that. It's weirdly close for what we've gone through to where we're at now in the valuations. Just knowing, watching my own house progress over the last 7 years and seeing that transpire, it gives us hope certainly going forward.
Put it this way: would you rather put your money right now in the stock market or in some real estate?
Give me some of that.
I mean, it's appreciating 7% a year here at least, and the stock market isn't doing that. So that's a good thing again for investors. And you guys are seeing investors as well buy. We really have a shortage. Did you see where Bend is approving for like 1,500 new apartment units? Because there's a housing shortage.
Well, they need it.
What about us?
Yeah, we need it too.
We don't have anything going. Yeah. And that's what's really making the rental market crazy, which reflects down especially in those lower prices in housing. Right. And there's nobody addressing that, unfortunately, I don't think. And we're still going to have a shortage of that. But that's
keep an eye on our planning commissions. There is a apartment complex coming in Crater Lake and Roberts that's in the works.
Yeah.
There's one in Central Point trying to
is there really
to come in too.
There's definitely a need and a demand for units out there.
All right. Well, we'll see what happens with you. How can someone want to get a hold of you guys? Because it's nice to visit with you. First of all, Deanna, they can Google you, find you.
Yeah, Diane and I are certainly have our web presence. Our website, livinginsouthern.com, is a great spot to go to learn more about us.
Yeah.
Read some testimonials, contact information.
Well, you do a great job. And again, congratulations, you and Diane. You have a great real estate business, and shows that.
Too.
And Doug, shoot, what can you say about him? It's like legends here, Joe, with us in
Doug
this thing. You still like it. You got a great gig going. You got good business that you've created too for yourself.
It's fun.
Yeah.
It's fun helping other people fulfill their dreams and get their houses sold and buy their house.
And there's a lot of stuff going on, so you're never really bored, are you?
Oh, never bored. It changes every 5 minutes.
And you go out, you two go out and show people. You're out driving.
Yes.
I see you out there.
We love showing properties,
isn't it? That's what they do.
Oh, yeah.
Yeah.
That's the best part.
It's
the problem solving. It's the in this type of market, I enjoy the challenge. I'm competitive by nature, so being the first to find something.
Yeah.
That to me is the interesting part. I've been in this market, and there's also a bit of a catch-22. Attitudes start to change, entitlement starts to kick in. It's not ideal in some scenarios, but for the most part, it's fun.
But that keeps your juices flowing, when you're actually dealing with people. I think the best fun is meeting people and doing and enjoying them and getting them through whatever they're
we provide a service.
Yeah,
if they could just get on Zillow and get everything they need, they wouldn't need us. But they need the networking behind the scenes. They need the sneak peeks on things that haven't hit the market.
I also
those are the things that continue to make a good realtor a very important part of the process, and not something you just want to take on your own when you could have that expertise working for you.
You can't dabble. It has to be a full-time commitment to the industry because things are changing so quickly.
All the time. Doug's got the final word.
And just real quick, just MLS stats right now for houses over 500,000. We've already closed 145 houses that were over 500, and the average days on the market was 167 days, and the average sales price was $712,562.
See?
Robust higher-end market.
Are those houses selling?
Now.
Yes, they are. Yep. So, it's a seller's market, so this is the time to do it. That's interesting statistics. I didn't know much about the luxury market. I think we do now a little bit more, don't we, Joe?
Doug and Deanna have sold a few of those.
Yeah, I've sold one or two, and continue to do that. Great to have you with us. Thank you so much, and we'll talk with you soon. That'll do it for the Real Estate Show on KMED for October 17th.
To the Real Estate Show on KMED AM and FM radio, presented by John L. Scott Real Estate of Southern Oregon, along with All Cities Property Management, the Home Builders Association of Jackson County, Ditech Mortgage, the Jackson Soil and Water Conservation District, and the Rogue Valley Association of Realtors. For guest information or to watch a past show, visit Visit us online at realestateshowOregon.com. Join us again next weekend for Southern Oregon's one and only real estate show on KMED.